Financial freedom. It's not just about being rich, it's about peace of mind, it's about having choices. When you're in control of your money, you're in control of your life. You work hard for your money. Don't let it slip through your fingers. Taking charge of your finances is easier than you think. With a little knowledge and effort, you can achieve your financial goals. This guide will give you the tools you need to succeed. It's time to take control and build a brighter financial future. Let's get started. A budget is your roadmap to financial success. It provides a clear path to achieving your financial goals and helps you stay on track. It's not about limiting yourself or cutting out all the fun. Instead, it's about making your money work for you in the most efficient way possible. By budgeting, you can enjoy the things you love without the stress of overspending. It's about balance and making informed choices. A budget helps you track where your money is going and make informed spending decisions. It allows you to see the bigger picture and understand your financial habits. There are different budgeting methods you can try, each with its own advantages. Finding the right one can make a big difference in how you manage your finances. The 50/30/20 rule is a great place to start. This method divides your income into three categories: needs, wants, and savings. Allocate 50% of your income to needs, 30% to wants, and 20% to savings and debt repayment. This simple structure can help you prioritize your spending. By following this rule, you ensure that your essential expenses are covered, you have room for discretionary spending, and you're also saving for the future. Zero-based budgeting is another popular method where you assign every dollar a specific purpose. This method can help you maximize the efficiency of your income. Choose the method that best suits your needs and lifestyle. Whether it's the 50/30/20 rule, zero-based budgeting, or another approach, the key is consistency. Creating a budget is simple. List your income, track your expenses, set financial goals, and review and adjust regularly. This process helps you stay on top of your finances. Regularly reviewing your budget ensures that it remains relevant and effective. Adjusting categories as needed helps you stay flexible and responsive to changes. Remember, a budget is a living document. It's not set in stone and should evolve with your financial situation. Be flexible and adapt as needed. Your budget should work for you, not the other way around. Embrace the process and take control of your financial future. Saving money is crucial for a secure financial future. It provides a safety net for unexpected expenses and helps you reach your long-term goals. Start by building an emergency fund to cover 3 to 6 months of living expenses. There are various types of savings accounts available, each with its own interest rates and terms. Explore options like high-yield savings accounts, money market accounts, and certificates of deposit. Automate your savings by setting up regular transfers to your savings account. Cut back on unnecessary expenses and find creative ways to save money in your daily life. Remember, every little bit counts. Not all debt is created equal. Understanding the difference between good debt and bad debt is crucial for your financial health. Good debt, like a mortgage or a student loan, can help you build wealth in the long run. These types of debt are often considered investments in your future, as they can lead to home ownership or higher earning potential. Bad debt, like credit card debt, can trap you in a cycle of high interest and financial stress. High interest rates can make it difficult to pay off the principal, leading to a never-ending cycle of debt. The first step to managing debt is to understand your current situation. Take a close look at all your financial obligations to get a clear picture. List all your debts, including balances, interest rates, and minimum payments. This will help you prioritize which debts to tackle first. Create a debt repayment plan, focusing on high-interest debts first. By targeting these debts, you can reduce the amount of interest you pay over time. Explore debt consolidation options like balance transfers or personal loans to simplify your payments and potentially lower interest rates. Consolidating your debt can make it easier to manage and help you pay it off faster. Seek professional advice if necessary. Financial advisors can provide valuable insights and strategies tailored to your specific situation. Remember, becoming debt-free takes time and effort, but it's a worthwhile goal. Stay committed to your plan and celebrate small victories along the way. With persistence and discipline, you can escape the debt trap and achieve financial freedom. Section 5. Plan for tomorrow. Secure your financial future. Financial planning is essential for achieving your long-term goals, including retirement. Start by defining your goals and setting a timeline. Consider factors like retirement age, desired lifestyle, and potential healthcare costs. Retirement may seem far away, but it's never too early to start planning. Explore retirement savings plans like 401(k)s and IRAs. Take advantage of employer-sponsored plans and maximize your contributions. Consider speaking with a financial advisor to create a personalized financial plan. They can help you assess your risk tolerance, explore investment options, and make informed decisions based on your individual circumstances. Section 6. Investing Basics. Make your money work for you. Investing is an essential part of building wealth over time. When you invest, you're essentially putting your money to work for you, allowing it to grow and potentially outpace inflation. There are various investment options available, each with its own risk and potential return. Start by understanding the basics of stocks, bonds, and mutual funds. Diversifying your portfolio can help manage risk. Consider your investment timeline and risk tolerance when choosing investments. Long-term investors may opt for higher-risk options with greater growth potential, while short-term investors may prioritize stability and capital preservation. Section 7. Credit Crunch. Understanding your credit score. Your credit score is a numerical representation of your creditworthiness. It is calculated based on your credit history and financial behavior. It's a key factor that lenders use to assess your ability to repay a loan. Lenders look at your credit score to determine the risk of lending you money. A good credit score can open doors to better interest rates and loan terms. It can also help you get approved for credit cards, mortgages, and other types of loans more easily. Several factors influence your credit score, including payment history, credit utilization, credit history length, and types of credit. Each of these factors plays a significant role in determining your overall score. Check your credit report regularly for errors and monitor your credit score. Mistakes on your credit report can negatively impact your score, so it's important to address them promptly. Pay your bills on time, as timely payments are one of the most crucial aspects of maintaining a good credit score. Keep your credit card balances low, ideally below 30% of your credit limit, to show that you are managing your credit responsibly. Avoid applying for too much credit at once, as multiple credit inquiries can lower your score. Building a positive credit history takes time and responsible financial behavior. Consistently practicing good financial habits will help you achieve and maintain a strong credit score over time. Section 8. Insurance 101. Protecting what matters most. Insurance is essential for protecting yourself and your loved ones from financial hardship. It provides a safety net in case of unexpected events like illness, accidents, or property damage. There are various types of insurance, including health insurance, car insurance, home insurance, and life insurance. Evaluate your needs and choose coverage that aligns with your circumstances and budget. Shop around for the best insurance rates and compare quotes from different providers. Understand the terms and conditions of your policies and review them periodically to ensure they still meet your needs. Section 9. Beware of scams. Don't fall for financial traps. Financial scams are becoming increasingly sophisticated and prevalent. Be aware of common scams like phishing emails, investment schemes, and identity theft. Protect your personal and financial information carefully. Never share your passwords, account numbers, or social security number with anyone you don't trust. Be wary of unsolicited offers that seem too good to be true. If it sounds suspicious, it probably is. Report any suspected scams to the appropriate authorities, such as the Federal Trade Commission or your local consumer protection agency. Educating yourself about common scams can help you stay safe and protect your finances. Section 10. Seeking help. Resources for financial guidance. Don't be afraid to seek help if you're struggling with your finances. There are numerous resources available, including financial advisors, credit counseling agencies, and government programs. A financial advisor can provide personalized guidance and help you create a financial plan tailored to your goals. Credit counseling agencies offer support with debt management, budgeting, and credit repair. Government programs like the Consumer Financial Protection Bureau provide educational resources and consumer protection services. Remember, seeking help is a sign of strength and a proactive step towards financial well-being. Section 11. Stay the course. Your journey to financial freedom. Mastering your finances is an ongoing journey, not a destination. It requires commitment, discipline, and a willingness to learn and adapt. Celebrate your successes along the way, and don't be discouraged by setbacks. Remember that financial literacy is a lifelong pursuit. Stay informed about financial news and trends, continue to educate yourself, and seek guidance when needed. You have the power to take control of your finances and create a brighter future for yourself and your loved ones. Start today and enjoy the peace of mind that comes with financial security.